Good morning, all. CamelbackTrading.org coming to you this Thursday morning. We are looking at the last 3 days of the SPY ETF's market profile here on Window Trader. And what we're seeing this morning is, it can't really come as a surprise, right? The market just seemed exhausted. It seemed to take every ounce of energy they had over these past 9 or 10 days to finally get the all-time high in both the SPY and the ES, both of them in regular trading hours right now. So I mean, this market is done and dead? Of course not. But I think health-wise, it's not a bad thing if it is to pull back a bit, balance, and then try to resume bull. We'll see if that's the case. I said yesterday there hasn't been a downside gap in the month of August. They're attempting one now. Not one of any great substance. Right now it's about 60, 70 cents. But it's still something we haven't even had. So let's go over destinations and a game plan. So right now, if we gap lower, we'll use yesterday's low of 336.62 as our first destination. Then we have our pre-market high of 337.52. And remember, we went out with a price probe, L's low of 337.70, and a price spike, A's low of 338.62, and then the all-time high of 339.61. For the downside, since there's still just over an hour to go, we'll use yesterday's low still of 336.62. Then we had the week low, right? 336.61, 335.62 daily low, 335.43 daily low, and then the real important one, 332.01 weekly low, and then 331.13 daily low, and filling the gap at 330.06, a 107-point gap from August 5th. So if you look at it in the bigger scheme of things, you could say it's a 3-day balance, it's a 6-day balance. Bottom line is, we're trying to take out this 3-day balance and then trying to take out this 3-day balance. So do they defend the 335 level? Well, if they do, then nothing's really changed and we're just in a 6-day balance. If they're able to get below and accepted below and get into M's range from the 11th, then at some point you will test that weekly low. That's basically what we're looking at. So what's the game plan for this morning? Well, a couple of things. Right now, it's a perfect size gap for me to want to take, right? 60, 70 cents up to $1. I would take a put play. Now, a lot of different things if we come up and fill the gap. Acceptance into M. It's very hard to tell in A period. So if they do fill the gap, do they get accepted into M? Do you short it until we see if the price probe is accepted or rejected? Right now, it's being accepted. There's a lot of different things. If you trade all of M, is that all they want to do? Do they test the price spike if we get up? So I'm not going to say I want to short it and continue to short it and continue to short it. But there's a bunch of hurdles the bulls will have to overcome right now. 1 is the gap, 2 is the price probe, 3 is the price spike, and 4 is the value area. So right now I am not looking to take a call play. I will take a put play. If the gap fills, doesn't necessarily mean I'll get out of it right away. I want to see what happens in M period. If we taper off, if we get into it and then get rejected out of it, then I have no problem even adding to that short. If, however, say in B period, we start one-time framing up inside of M, then that short play is done, at least for the short term. And then we see what happens at the price probe and or the price spike. As far as a call play, do I want to take one? Not necessarily. Now, in the next hour, if we are to gap a lot larger to the downside, then I probably won't take that put play right away and see if we get an inventory adjustment and see how we act at the bottom of the 6-day balance. Doesn't mean I want to be long there. If I took a long play, it wouldn't be because the market's good this morning. It's just going to be because maybe they defend the bottom of a 6-day balance, right? Because then the next real important level is M's range from the 11th, which would take you down to last week's low. We're one-time framing up 7 weeks right now. And don't forget, we took out last week's high. If in the next 2 days sellers show up and by some chance we close below last week's low, that would be an outside week down. That's something the bulls certainly do not want to see. So we should get a decent reaction at the bottom of a 6-day balance. We should get a nice battle here if we are to attempt to get into M's range from the 11th. And we should have a nice battle from yesterday's low if we're attempting to get back in it. A lot of moving parts here. Come join us at CamelbackTrading.org's voice channel room, and you're going to be getting what we're doing the entire trading day. And then quickly on the charts, I'll just show you the weekly and daily. We know the monthly wants to be accepted above February's all-time high, right? We still have 7 days left in the trading month, or 8. Weekly, we're still healthy, but right now we're back inside last week's range. That's not the part that you have to worry about for now. The part you have to worry about is if sellers show up these next 2 days and are able to take out last week's low. Number one, you stop the one-time framing up. That's very important. And then more important would be if they were able to close below last week's low to have an outside week down. And then on the daily, same thing. Whether you want to call it a 3-day balance, 6-day balance, balance rules are going to apply right now. If the buyers do not hold that 335.43 level, the next destination will be last week's low. Good luck trading today. Have a great day, and we will recap at 4 p.m.